We're going to give a brief review of the market report for May 2013. Obviously, tons to talk about relative to what took place last month with the smashing in the gold and silver prices. And actually, I made it very concise. There's been so much written on the internet, but we did examine a few things that I haven't seen others write about. And one is this Pascalama situation with Barrick and how much of that has been sold forward and what that would mean to the market ultimately. And we also talked about where we think the market's going in the short term, intermediate term, and long term. So that's the editorial part of the market. Something else in the May issue that would be of interest to people that really are in the sector and really need inside information, or maybe not inside information, but detailed information, is the second section after the editorial. True cost of mining silver, not the cash cost, but the real cost. This is something that's been irksome to me from the beginning. Cash costs are required to be determined for accounting purposes only, and a lot of CEOs and others in the industry are very fast to brag about their cash costs. Cash costs mean almost nothing. The true cost is what you need to know. So for example, there's a North American miner that talks about being the lowest cash cost in the industry and spouting out a number, and that's all well and good and all truthful. But people that are sitting at a gold show or an investment conference that hear that number and the enthusiasm perhaps with which it's being delivered get the concept that that's what it costs to mine that silver per ounce, and that the current spot price of $24 is hugely different than that cash cost, and therefore there's this huge margin for profit, more profit. Not true. If you take that same company's balance sheet and look at it, you'll find out perhaps that company lost money mining silver. So we look at the true cost. You can see over here on the right, First Majestic, you can see the total cash costs here. I'm not going to scroll down and show you the absolute cost, but we looked at several of the silver miners at the level of a First Majestic in that area and what the real costs are. I think this is important to note because people, again, need to know when they're investing in the mining sector, what are the real deal, what are the real numbers, and how much profit can they expect. And I don't know of too many that have done this study. It's not a real tough one, but it's something that's important to know. Also in the May edition, we did an interview with Dale Olmsted regarding the precious metals debit card. I call it a silver debit card, but really it could be gold, silver, platinum, palladium, or combination of any of those. There's also a cash side to it as well. It's all outlined in this interview that David Smith, our chief analyst or senior analyst, did with Dale. I'm just going to focus in on this right-hand side here. It's a very interesting interview, but if you have a precious metals debit card, the question was asked, what would happen with your metal? And basically it's segregated. You can pick your metal up at any time that you wish. And there's also a question here about what would happen if there was a ATM run, which of course we saw in Cyprus. And the answer is with an ATM card issued by this bank, you would be in the banking system. But if you were backed by metal at any rate, in other words, if you were 100% backed by metal, nothing would happen to your metal. If you had a cash account with your metals account, which is what I personally have, then the cash side might be in jeopardy, but the metal would not. So I think that's important. Again, I'm well aware of the fact that this isn't for everybody. Not everybody wants one, not everybody needs one, but it's something that's been talked about for years. And as far as I know, this is one of the first ones implemented that's not real cumbersome. There is one available through Peter Schiff's outfit, but I think you cannot be in the U.S. to obtain that. This one is available to people in the United States of America, as I understand it. In fact, I know that's true. And whether or not it's available in Canada or not, it's to be determined. And like almost every month, there's very few months we don't take questions from our paid members. This is just one. I think I did 6 or 7, and usually there's 20 or 30 in any given month. and I do my best to pick the ones that have the most benefit to the entire paid membership. But this letter one, you can see this gentleman's from the UK, and he talks about bull since 2009 and what happens and the physical shortage and on and on. Of course, I go on and answer that in detail, like I do all these questions, and it's usually again beneficial to all members. A lot of this stuff could probably be obtained on other websites, but we do it in a very objective way and cite our sources in most cases. And finally, has been the case since we started this report, the asset allocation, and we look at it a little differently than many in the industry. We look at the top tier, the mid-tier, and speculative category. Basically, speculations are just that, money you can afford to lose. Mid-tier are serious companies with higher growth rate, probably have more risk than the top tier, and then the top tier has the serious money, and these are usually billion-dollar companies, but still have room for growth and, of course, move primarily with the underlying asset, be it gold or silver or both. So that is something reserved for our readership, and certainly a great deal of time and effort is spent on these selections, and certainly we are well aware of the fact that this sector has been beat up tremendously. In fact, the last month in particular has been rather tough to take, but nonetheless, it is what it is. We do believe that it isn't going to be too much longer. Bottom will be found probably in the mining sector first before the metals themselves, and we will once again regain some of these losses, and we will at some point get back to the 1550 level in gold and the $30 level in silver. And once that's achieved, we're back to kind of where we ended the consolidation until this last routing, and be back up and moving upward. We do believe that will happen before the end of this year, and that the bull market will be in force in the year 2014 onward.